Hi there, this is Alvin from Dr. Wealth. In this episode, I'm going to share with you 20 most profitable US blue chip companies. And these companies have very high profit margin sustained over a long period of time. And these are likely the most powerful companies around the world as well. So I want to review some of these stocks to you. And maybe, who knows, you may find some of the investment ideas from this video itself. So let's go through the rules that I use to screen out this list of 20 stocks, okay? And the first rule is I limit it to S&P 500 index components. This is because it is probably the most well-known stock index in the world, and the S&P 500 index is also the most passively followed index for ETFs for a long time to come. And therefore, I think it's a very relevant index which consists of the MNCs of the world, right? US have the most powerful businesses and MNCs, and it's captured in this S&P 500. And the second thing is I wanted to look for a high enough profit margin, right? Of course, I would hope to find 50% net profit margin. I do find a few, but that's just too few to look at, and therefore I lower it to around 30%, which is still considerably high. And that means that for every dollar of revenue, it keeps 30 cents at least, right? And 70 cents are all the costs and expenses of the business. So therefore, not many companies can even pass this 30% profit margin. So it is a lucrative business model at the end of the day. So fat margins can also be a sign of a competitive advantage or moat, what we call it, because Jeff Bezos did say, your profit margin is my opportunity. In other words, in a world of business, when a business enjoy a very fat margin, it will attract competitors to come in and vie for the same market share. And therefore, if a company cannot defend the market share, it will eventually lose out, right? And the profit margin will start to drop as they cut prices. So if a company is able to have this high net profit margin and sustain over a period of time, it is a sign of competitive advantage because it can protect its market share. And the second thing is that the operation is likely to be efficient, right? The cost is controlled well, and therefore the margin is high. And last but not least is also the business model itself, because there are some business model or industry that generates higher margin for the business owners, and there are some industries that are more cutthroat, because in some market it can be a perfect competition where there is razor thin margins to be made. So therefore, a high profit margin is a sign of possible these kind of scenarios. Essentially, you're buying a good business in a good industry. The third point is it's not just 1 year they get a net profit of 30% margin. It has to be sustained over several years, right? Because 1 year it can be phenomenal or exceptional earnings, which may not be repeatable, and that's not what we want, right? We want it to be sustainable over a long period of time. So I also looked through the past 10 years of their net profit margin profile, and I want to pick those that have most years that have more than 30% net profit margin. But the thing is, not every company can have net profit margin of 30% throughout the 10 years, right? There are just a handful of them. Some of them are promising because initial years, maybe the first 5 years, they don't have that 30% net profit margin. They may be enjoying in the teens or 20+%, not that bad. Just that for the recent 5 years, their net profit margin has grew, right, to above 30%. So in that case, I also will include them because it may be a sign that they have reached much better economies of scale, and therefore their profit margin has expanded. So it's not necessary that past 10 years or every year must be more than 30%. It's more like the trend that we are looking at. And if let's say the recent 5 years I see a declining profit margin trend, then that's where I will exclude it, even if the first 5 years has more than 30%. So it's more of the 10 years trend of this net profit margin. There must be some improvement rather than a decline. Okay, so that is how I further filter the list. And point four, I added in a bit of that earnings growth, okay, because I believe that even if a company is in a mature stage where it's enjoying fat margin, it should still be growing a bit at a smaller pace. And the pace that I set it is based on the US GDP growth rate, estimate about 3% per year, about 2 to 3%, but I use 3%. So a company should grow at least 3% or more for their earnings per share over the past 10 years. Okay, so with that, then we can eliminate some of the companies that are stagnating or even declining, right? So that is also not the kind of companies we are looking at. It should still grow from strength to strength. And point five is that it should also deliver the positive 10-year returns in terms of dividends and capital appreciation, right? Both add together gives us the total return. It should be a positive number. Why is this important? Because you can have a case where The fundamentals are right, okay, the profit margins are healthy, but at the end of the day, as a shareholder, you do want to benefit from it. Okay, you do want a tangible return. And given 10 years is a long time, and if the stock is still not making money, I think that is something that is not a desirable option for investors, right? So therefore, there's this filter that I added in to make sure that these 10-year returns are positive. And also more for foreign investor, okay, because the foreign investors rely more on capital gains than dividend gains, because dividend gains are taxed at 30% in US for the foreigners, right? So I want to see the total returns out of it, not just using a dividend yield. And therefore, with that capital appreciation, that's where foreign investors can also benefit from some of these stocks with high profit margins. And there are some observation or some stocks that I wanted to share with you. Some may be surprising, some may not be surprising to you. And the first one is Nvidia. Okay, so this is the hottest stock right now with regards to AI, and it did hit a 48.8% net profit margin in 2023. So you can see how profitable or how lucrative this Nvidia has become due to the AI craze and amount of graphics card they sold and the kind of margin they are extracting. Definitely there's a great economies of scale. So you can see the huge jump from, actually it's a 2024. That's where the FY ended, Jan 2024. So in FY Jan 2023, they were still doing 10+% net profit margin, right? But historically, you can see that the margin is not that bad because it is ultimately not a capital intensive business. It is mostly a design company. The graphics cards are made by TSMC. Okay, so the margins are likely to be a lot higher for these kind of capital-like or asset-like companies. So Nvidia is one, likely due to the AI. Whether it is sustainable or not, it depends on how long this AI craze is going to run. Right, so I do believe there is going to be a big shift. Actually, the shift has already happened. I think it's likely going to run for a while more before the party gets over. And the second one is Visa. This should not be surprising as well. This is the largest card network in the world. It's bigger than MasterCard, and it has enjoyed like 52.9% in September 2023 when the FY ended that period. And if you look at the past six years, okay, it has always achieved more than 50% net profit margin. So this is one of the most consistently profitable company, and it is also understood to have a lot of moat because it's not easy for you to say start another new card network to compete with Visa or MasterCard. So you can see Visa's profit margin is actually higher than MasterCard in this case. Okay, so a greater economies of scale potentially is happening here, and it's also a Warren Buffett stock, right? The third one is a big tech, okay, another big tech, one of the Magnificent Seven, Microsoft, and you can see that there is a general trend, right? There are some years that profit margin has shrunk to say about 12%, 15%, but generally most of the time the net profit margin is above 25%. And in the last 3 years, it has surpassed 30%. Okay, actually, it's in the last 5 years, it surpassed 30% net profit margin. So again, this Microsoft has probably moved towards more cloud-based kind of a business, and that has proven to be a very lucrative, high profit margin kind of business, just like Amazon, right? The e-commerce margin is very low, but the AWS margin is a lot higher. It gives Amazon all the profits that it needs. So likewise for Microsoft, the shift towards more cloud-based kind of business is reaping the net profit margin benefit. And company number 4 is CME, Chicago Mercantile Exchange. So this is not a very popular or familiar exchange with, say, retail investors because they deal with mainly derivatives, right? It can be options, futures, etc. And they usually do it more for the commodity sides of the house. Yeah, of course, it has expanded indices, forex, and it is the largest US derivative exchange. Okay, not in the world, but in the US it's the largest, and the profit margin is crazy. In fact, this is the most profitable company in the entire S&P 500. Again, exchanges are very asset-light. Okay, they mainly match orders and make sure that the market functions properly, and they don't have much cost except human manpower as well as a service. That's about it, right? And therefore, when the transaction volume is there, they will reap a very big benefit out of it. So stock exchanges are one of the most profitable kind of business models in the world, and Typically, it also have a lot of competitive advantage. You can't have too many. In some countries, they are licensed, right? They have only one license or two license. So therefore, this is stock exchange is one of the most profitable kind of business that if you get a chance, run it. And number five is also in finance. JP Morgan, banks generally have also enjoyed high profit margin. So in this case, JP Morgan made the list. It has more than 30% net profit margin for 5 out of 10 years in the past. Okay, so it is the largest US bank. It is not the largest bank in the world, okay, by assets not, right? But again, a lot of all these US companies, these are names that you have seen before, heard before, some you may have even invested before. So hopefully this may give you some idea where to look at, what to look at, what are some of the business models that are solid, that are lucrative, and they have been able to defend their market share over the years, which means they are more likely to walk off future competitors as well. So these are just 5 examples. I have a list of 20 of them. If you are interested to figure out the rest of the 15 stocks, okay, in this 20 most profitable US blue chip company, you can click on the link in the description. I will email you the complete list of these 20 stocks, okay, for free. Hopefully you can find a bounty bagger blockbuster stock from this list, and all the best for investment. Do like this video, subscribe to the channel, and I'll see you in the next one. Goodbye.